Hello everyone. Today we will be touching on source documents and non-current asset. Okay, so let's start with source document first. So that's under your theories that you guys need to master. Okay, so source document, what source document? It is an evidence to prove that the transaction has taken place. So these are the source documents that are in your syllabus that you are required to know. Okay, so all these are the official definition taken from the textbook. So for me, I like to simplify it, okay, because whatever from the textbook is very boring and dry lah. Okay, so simplified, it will be this. Whenever I buy and sell on credit, it is a invoice. Okay, so it must be on credit. Buy, sell on credit, invoice. I undercharge someone or someone undercharge me is a debit note. Okay, when I'm overcharging someone or someone overcharge me, it's a credit note. So when I return a goods, will also mean that someone overcharged me. Okay, so whenever I return goods to my supplier or customer return goods to me, it will be a credit note. So as long as they say that someone out there returning goods, straight away is debit note. So please don't get mixed up between these two. Okay, a lot of students always get mixed up between these two, so just be careful. Okay, return goods is a credit note. Okay, the next one, straightforward. Pay money, payment voucher. Receive money, receipt. That's all. Pay money, payment voucher. Receive money, receipt. So whenever you're doing the question, you just repeat to yourself. You keep repeating to yourself. Okay. Pay money, payment voucher. Receive money, receipt. Okay. Next one, bank statement. So bank statement, it will be all things related to your cash at bank account. So whatever in your cash at bank account, we can see through your bank statement. So this is something that is prepared by the bank. Okay, so for issuing of check, people will ask, can I also call that a bank statement? Yes, you can. However, the syllabus, when you say issue check, they want you to write this payment voucher. Okay, issue check, payment voucher, receive money, receive check, receipt. Okay, so although you are correct, but they still want you to write these two like when they say receive check or pay check. Okay, so other things related to bank statement will be like your interest, then you will use bank statement. Then last one, remittance advice. Remittance advice, I just want to inform people that I paid them money. Okay, inform people that I paid them money, that's remittance advice. Okay, so these are the simplified explanation of each source document to better understand. So let's test our understanding. Okay, how do we apply this? So I'm gonna give you guys maybe you all can pause on the video for a while and then we will continue. Okay. Okay, I'm gonna assume that you all pause and then went to do on your own. Okay, so here's the answer. Okay, first one, bought goods on credit. So remember just now, buy, sell on credit, it is always invoice. Okay, buy, sell on credit, invoice. Here, sold goods and receive cash. So the keyword is this already, receive cash. Receive money, receipt. Pay money, payment voucher. So here I receive money, receipt. Customer return goods. So here returning of goods, there will be a credit note. Okay, doesn't matter who return. As long as someone return goods, credit note. Then here, I will just need to highlight the keywords, okay? Issue a check. So what does issue check means? It means pay money. Pay money, payment voucher. Remember? Okay, so here payment voucher. Here, inform credit customer that she's undercharged. So undercharge is a debit note. Straightforward. So as you go along with more practices, you will get more familiar and you will get better and better. Okay, so this one, it all comes down to practice. Okay, next, return goods to supplier. So again, I return goods, credit note. Okay, next one, pay check. So pay money, payment voucher, receive money, receipt. I pay a check, payment voucher. Okay, next one, credit customer paid. But my answer is receipt. Why? So here, pay customer pay means I receive money, right? So everything here have to be in your business point of view, accounting entity theory, am I right? Okay, so customer pay to me means I receive money, business receive money. Therefore, it's a receipt. Okay, so this one is quite tricky, so take note. Okay, customer pay to me means I receive money. So therefore, here is a receipt. Receive money, receipt. Here, purchase laptop on credit. So buy something on credit, it's an invoice. Lastly, check and tally against business bank account records. So how can I check my business bank account records? My bank statement. Okay, straightforward. So here's another set of questions. So same thing, you can pause this video and go and try it out, and then we will come in and go through the answers. Okay, so same thing, assuming that you have paused and try out the questions. These should be the answers that you have gotten. Okay, so first one, check and tally against business bank record. It's the same one as just now. Okay, so I want to see anything related to my business bank. It's bank statement. Okay, here, return computer to supplier. So again, here I'm returning something to someone. That will be a credit note. Credit customer wants to increase the money. So the fact that the supplier want to charge me more, the supplier want to increase my amount, means what? Means he didn't charge me enough, right? He charged me too little. He charged me less. So I'm being undercharged. Therefore, this is a debit note. So sometimes the questions may not be very straightforward. Okay, the question may not be straightforward. So you have to know how to infer the meaning of the question. So in this case, they say they want to increase the amount. So why want to increase? Because they undercharge you. Okay, so they undercharge you. So it's a debit note. Okay, they undercharge you. That's why they want to increase the amount. Okay, here, inform credit supplier that your check has been issued. We return advice. Okay, I want to inform them that I paid them money. Here, purchase debit check and pay cash. So the keyword here, pay cash. Pay money, payment voucher. Receive money, receipt. Okay, so here, payment voucher, because pay money. I want to see how much interest I got from OCBC Bank. Bank statement will show me that. Here, cash sale of customer. This is receipt. Okay, so you only have invoice when it's a credit sale. Here is a cash sale. So it comes down to the knowledge of you knowing the difference between cash versus credit transaction. So cash transaction means I buy now and I pay now. And then credit will mean buy now, pay later. So for here, cash sales will mean that I sell it now and I receive money immediately. So receipt. Okay, because I sell and I receive money immediately, receive money, receipt. Therefore, here cash sale is a receipt. Next, business undercharge. So debit note. Straightforward. Okay, so some theories are related to source documents. So they would like to ask what's the purpose. Is actually in the slide previously. Okay, so is to act as a proof, act as evidence that the transaction have occurred. Okay, so it is a proof. So when I pay money, I have the payment voucher to prove. I receive money, I have a receipt to prove that I receive money. Okay, and these are the details that I will get when I'm recording my journal. Okay, so I don't just anyhow record things that doesn't happen. Okay, then they will ask what's the accounting theory backing up why source documents are necessary. So it will be objectivity theory. Okay, so everything that we record must be supported by reliable and verifiable evidence so that our FS produced will be free from opinions and biasness. Okay, so this one, please need to know. Okay, so whenever you see a question regarding source document, it will be this one, objectivity theory. Okay, so next up, we will be touching on non-current assets. Non-current assets. So take note that non-current asset, the behind part will be for O levels only. Okay, so the sale of non-current asset, that will only be for O levels. Okay, so first of all, in this chapter, we need to identify what's the difference between capital expenditure and revenue expenditure. Okay, so capital expenditure is an NCA, revenue expenditure is an expense. Capital expenditure, the benefit will provide us for more than 1 year, but revenue expenditure, the benefit will be less than 1 year. Okay, then capital expenditure is to enhance and improve our NCA, whereas revenue expenditure is to maintain and repair. So whenever you see something that says maintain, you see something that says repair, it will definitely be revenue expenditure. So they say, oh, they want to maintain the motor vehicle, they want to repair the aircon. Okay, that one will definitely be revenue. Okay, so you see these two words, definitely it's revenue expenditure. Okay, so expenditure, all this, it just means that whenever your business, okay, you run a business and you are, your money is flowing out. Okay, so your money is flowing out. So when your money flows out, how do you classify them? So you can classify them either as an NCA or you can classify them as an expense. So why do we do that? So if something is very big, I will classify it's very big amount. I will classify it as an NCA. Why? Because every year I will have to pass depreciation, I have to do audit checks. But if I were to pass something as an expense, that means it will just be in my statement of financial performance and I'll just forget about it. Okay, so normally for small amount, which means they're immaterial, I will call it as a revenue expenditure, which is an expense. So I don't need to do depreciation, I don't need to do any audit checks. Can? Okay, so generally these are for a big amount and revenue are smaller amount. Okay, so as for how we determine what is big or small, we are not going to learn in this syllabus lah. Okay. So basically that's it for capital expenditure. So please know this is quite important. They will always like to ask what's the difference between these two. So you got to know. Okay, so a quick exercise. Which of the items are capital or revenue? Okay, so same thing, go and pause the video, go and tick the boxes and then play back the video. Okay, so let's assume that you have already done. Okay, so for here, purchase price of the van, okay, your van, your motor vehicle, definitely is capital expenditure, right? Okay, the cost of the van is a motor vehicle. Okay, COE of the van. So what is a COE? So COE is Certificate of Entitlement. So if you are owning a vehicle in Singapore, you must purchase this paper called COE. Okay, so it gives you the right to drive this vehicle on the road of Singapore. Okay, so with that said, that means that it is a package, right? So I cannot say I buy the van, but I don't want to buy the COE. Cannot. It's together one. I buy the van, I must buy COE also, as long as we are in Singapore. Therefore, it's a capital expenditure. I will count it together as the NCA cost. Okay, printing of company logo. So same thing. I print my company logo. Can this benefit last me more than 12 months or not? Yes, right? So capital expenditure. Okay, so this one more than 12 months, less than 12 months. So whenever you are unsure, you ask yourself, can this thing last me more than 12 months? If yes, it's a capital. If no, then revenue expenditure. Okay, servicing of a van. Servicing of a van. So servicing, do I need to do it regularly? Yes, right? So the benefit doesn't last me more than 12 months. So revenue. Okay, parking and petrol, I think quite straightforward. Parking and petrol definitely cannot last us for more than 12 months. So these are all under revenue. Okay, then here salary for the driver. Okay, then here I already include this keyword, monthly salary. So it's a monthly thing. Does it last more than 12 months? Nope. Therefore, revenue expenditure. Okay, so pretty straightforward. Okay, another way they can ask you will be, what is the effect of this capital and revenue expenditure being placed wrongly? Okay, so here's what it means. So for here, we have a March year end. This company, they extend the shop premise at a cost of 30,000. So this is considered quite a big sum, right? And I extend means what? I'm enhancing it, right? I'm not trying to maintain the condition. I'm actually enhancing it. So this one, it will be a capital expenditure, which I will call it as a NCA lah. Okay, so inclusive of the 30,000, 5,000 is used to repair. So remember just now I say repair or maintain, you know that for sure that is a revenue expenditure. Okay, and that is a expense. Okay, so here they say that the full amount of 35,000 is recorded as a non-current asset. Okay, so that is definitely incorrect lah. Okay, so total 35,000, 30,000 is a NCA, 5,000 is an expense. But the whole thing I go and put as a NCA. Means wrong lah, right? Okay, so for here, state the following that is affected by the above transaction. Okay, please indicate the effect and the amount. So whenever you see the word effect on profit, what do you write down? Profit equals to income minus expense. Okay, so whenever you see effect on profit, it will be profit equals to income minus expense. So for here, total 35 I put as a NCA. Means by right, the 5,000 should be an expense, but instead of expense, I put as an NCA. So means what? My expense is higher or lower? Lower, right? Lower. Because this should be an expense, but I didn't put in expense. I put as a NCA. So my expense is lower. So expense lower means my profit will be overstated. So here my answer is overstated. By how much? By the 5,000. That is my repair expense. So far so good. Okay, next one, NCA. So same idea here. By right, my 5,000 should be an expense, but instead of an expense, I put it as an NCA. So my NCA is higher, right? Isn't it? By right, my NCA should only be 30,000, but now I go and put as 35,000. So here, overstated. Okay, this one should be quite straightforward. Okay, so this is another type of question that they can ask. So normally it will be like that. Okay, what's the effect on this? If your capital revenue write wrongly, or the previous question they ask you to tick. Okay, so these are the ways that they can test you. Okay, so theories again, capital expenditure, it will always be materiality theory. Confirm is materiality theory. Okay, so every time you see capital revenue and they ask you for a theory, it will be this. Okay, so this is basically what I was explaining earlier. Okay, relevant information should be reported in the FS if it's likely to make a difference in the decision-making process. Okay, so something that is very material, means it's big amount, I will call it NCA, capital revenue, capital expenditure, I mean. Okay, then something that is very immaterial means small amount. Okay, then I don't put as an NCA, I put as a revenue expenditure. I will classify it as an expense. Okay, so that's it. So please remember this. This is also important. All the theories. Okay, so next one, we'll be diverging away from capital revenue, and now we will be learning the second portion of this chapter, which is depreciation. Okay, depreciation. So depreciation, you also need to know how to define it. Okay, so the official definition will be allocation of cost of a non-current asset over its estimated useful life. Okay, so what are the reasons why we have to depreciate our asset? Maybe these four lah. Okay, wear and tear, legal limits, usage, obsolescence. So if you don't know how to spell this word obsolescence, then don't write lah. You write this other three law. Okay, so some students, I don't know why they they want to write this one and they don't know how to spell it and they don't get a mark. Okay, so if you don't know how to spell, then just write the other three. Okay, don't need to use this one. You have three other options. Can? Okay, so now let's get into an example. Okay, let's run through the journal entry first for depreciation. Okay, so for depreciation, very straightforward. You only have one journal to know, which is debit depreciation, credit accumulated. So do take note that when you pass your depreciation, it will always be on your year end. Okay, it's always on your year end when you pass depreciation. This is something you do every year when you're doing closing. So what the year end is, doesn't need to be 31st December all the time. It can be 30 June, can be 31st March, can be 31st July, okay? So financial year end. So I will debit depreciation, credit accumulated depreciation. Depreciation is an expense that debit. And then accumulated depreciation is a contract asset. Contract asset. Okay, so like the word suggests here, accumulate. So accumulate just means that every year I keep on adding and adding and adding. Am I right? Every year I will keep adding on to my depreciation to this account. So for here, my accrued D is actually increasing because this is a contract A. When I credit, it increases. Okay? Okay, so depreciation, two types of method. First one, straight line, and second one, reducing balance. So there are more than these two methods, but in this syllabus, we're only learning these two. Okay, so straight line will be the most straightforward one. Okay, so we will assume that we provide constant benefits. Okay, so the formula will just be this. I'll take the cost minus the scrap value. So the scrap value basically means how much I have at the end of my useful life. So how much this NCA is worth at the end of its useful life. So at the end, when I don't want it anymore, okay, I want to sell it, how much can I sell for? The value, that's a straight value. Okay, then over estimated useful life. So this one, they will state like, okay, 3 years, 4 years, whatever. Okay, or simply, if they give you a rate, you can just take the cost multiplied by the rate. And you will do that every year. Every year, you will just take cost multiplied by rate because it's straight line. Every year, your depreciation will be the same amount. Okay? Okay, so for this first line, right, assume NCA provide constant benefit. This one you will write when they ask why they choose to use straight line method. Okay, sorry, why is it suitable for them to use straight line method? Then this will be your answer, okay, because we assume that the benefits provided is constant. So let's move to reducing balance. Okay, use another color. Okay, reducing balance, same thing, they will also ask why are we using reducing balance? Okay, because here we assume that the benefits provided is more in the earlier years compared to the later years. Okay, so the formula will just be this, rate multiplied by MBV. So MBV, every year it will change. Hence, your depreciation amount will decrease every year. Means it won't be the same. Okay, so your MBV every year, it will change. It will become smaller and smaller every year because the value of your NCA will drop over the years. Agree? Okay, so MBV, how do you calculate that? Take cost minus accumulated depreciation. Okay, then this multiplied by the depreciation rate, that will give me my depreciation. Okay, so straightforward. So you just got to apply the formulas and then you can get the answer. Okay, so now let's look at an example for straight line method. Very straightforward. Okay, so for here, for depreciation, normally I like to do it in a table form because I think it's a lot more neater and efficient. So if, let's say in this example, in the table, they want me to calculate depreciation of 2022, I will just take this 2022 depreciation. This is my answer. Okay, they want net book value of 2023. Net book value 2023, and it's this. So it's more efficient. So again, I mean, up to you. If you choose to just manually calculate, also can. Okay, so personally, I use this table method. Okay, so straight line. Cost 68,000. I depreciate 10% per year. Okay, full year depreciation charge in the year of purchase, but none. Full year depreciation charge in the year of purchase. Okay, so for here, it means that regardless which day that I buy, okay, on the year that I buy, which matter which day, okay, I will still count as full year. So for here, my year end is December. Okay, so maybe my year is December and I only buy it in November. Means I only use 2 months, right? But I will disregard it. I will still count as the full 12 months. That's what this sentence means. If they do not include this sentence, then you will need to prorate your depreciation. So you need to count how many months with it, and then you just multiply by the months are 4/12, 3/12, 7/12. Okay, so in this case, we don't have to, we just count the full year. So for here, my first column, it will be the year end. So my first year end for this one, for this motor vehicle that I bought, it will be in December 2021. My cost will be this 68,000. Okay. And my depreciation. So for straight line, this one will be what? Rate multiplied by cost, right? So rates 10% multiplied by cost, I get this. Acute D, since this is the first year, do you agree that I don't have anything accumulated from before? Right? So my first year, my depreciation is also my acute depreciation. Okay, because I don't have anything prior, what? So whatever I have this year is a fresh start. It's also my accumulated. Okay, then net book value, quick recap again, cost minus accumulated depreciation. Okay, so I take this minus this, I will get this. So that will be for your first year. And then moving on for 2022, my next year, same thing, cost 68,000. Depreciation will still be the same, still cost minus, cost multiplied by 10%. Okay, then acute D, last year I have this, I will add on to what I have this year, acute D. Okay, repeat the same process for MBB, cost minus acute D, I will get this. Okay, no issue, right? Straight line, very straightforward. So same thing, I'm gonna repeat for 2023. Okay, so you realize that my depreciation is the same every year, 6,008, because we are using straight line. Every year the depreciation remains constant. Okay, so now to pass the journal entry, it will be like that. So we can see that 2022, 6,008, 2023 also 6,008 is straight line method, doesn't change. Okay, so for here, debit depreciation, which is an expense, credit accumulated D, which is a contra A. Okay, so this one is fixed one. It will always be this journal. Okay, then for financial statements, quick recap. Performance, I will show income and my expenses. Position, I will show my asset equals to L plus E. So these are the three things that I'll have in my position statement. So for here, I want the year 2022 depreciation. So same thing, I can just come here. 2022 depreciation is this 6,008. Okay. So depreciation, like I said, is an expense. So I will show under other expenses. Okay. Then statement of financial position. This whole chapter is called NCA. So obviously I show NCA lah. Okay. So NCA will be my heading, and then here our NCA is motor vehicle. So for statement of financial position, it will be these three columns: cost, acute D, and MBB. So same thing, all these numbers, I will just extract from my table. Okay, so very messy. Okay, so I will just extract from my table, which is here, cost, acute D, MBB. Straightforward. Okay. So all these you can just extract from the table. It makes life easier. It's more easy. Okay, so that was for 2022. Then for 2023 is the same thing because it is a straight line method. So my depreciation still remains the same. Okay, then this time around, also same position. I will show these three. I will still show NCA as my core, as my header. And similarly, these figures also I will take from the table. So this is for year 2023, right? These are for year 2023. So for year 2023, Okay, so for year 2023, same thing, 2023, I will take my cost, my OQD, and my MBV. Okay, I just plug from this table and then I paste here. Simple as that. Okay, then now let's do something a bit more exciting, reducing balance method. Okay, so this one we are still keeping things easy where we only have one NCA. So later part, then we will do something a bit more fun and exciting where we have multiple NCA. Okay, so for here, it's the same example as previously. I have I have a 68,000 cost of a NCA, and then I'm depreciating 10% as well. But this time round, we are doing a reducing balance. So the other what's the word? The other description still remain the same. Okay, the condition is still the same. Full year depreciation charge in the year of purchase. So same thing, I will still use a table to help me for this. Year end, my first year end, 2021. I buy on Jan 2021. So my first year end, 2021. Cost 68,000. So this is a reducing balance method. So although it's reducing balance method, but first year, okay, so reducing balance, we do a recap. Okay, reducing balance, I will take MBV times rate, right? Okay, so MBV, how to get cost minus OQD. So for here, this is the first year, right? Agree. So first year, do I have any MBV? Do I have any OQD? I don't have because it is the first year, right? So it is the first year, so I don't have any MBV, any OQD. So my depreciation, I will definitely still take the cost. So I will still take 10% multiplied by the cost for the first year only because I don't have any acute D. Make sense? Okay, so same concept applies. It's the first year of my depreciation, means my acute D is empty one. So my first year depreciation is also the same as my acute depreciation. Okay, then same thing here, MBV is the cost minus acute D. So cost minus acute D, I will have this one. Okay, then next one, 2022 is the same thing. My cost doesn't change. It is still 6,008. But now I'm using a reducing balance method. So I will take rate multiply by my MBV. Okay, so I will take my MBV multiplied by my rate. This will be my depreciation. Okay, so just now is rate multiplied by cost. Now is rate multiplied by MBV. Okay, then same concept applies. My acute D, I initially already have 6,008. So now I will add on to what I have this year. So 6,008 plus 6,120, it will give me this amount. Okay, I add on every year's depreciation into my acute D. Okay, then same process again, MBV cost minus acute D, I get MBV for this year. Okay, 2023, repeat the same process again. Okay, it's the same idea. 2023 cost still 6,008. Okay, MBV multiplied by rates because reducing balance. Okay, so MBV multiplied by rate. So I have this. Okay, and then my acute D will be based on what I already accumulated so far, and then I add on to the depreciation I have this year, and that will give me my acute D. Okay, and then same thing again, MBV cost minus acute D. Okay, so run through the journal entries for year 2022 and year 2023. So year 2022, same thing. I will just go back to my table and extract it. So year 2022, I'm interested in the depreciation. So this is it, 6120. Okay, 6120. Okay, then 2023, same idea. Okay, 2023, I need the depreciation, so it's this one. Okay, 5508. 5508. So you see, it is really more straightforward lah. Okay, in my opinion, okay, you just extract whatever number that you need from the table and you just copy and paste. Everything is neat and tidy. Okay. Okay, so everything you need is on the table. And then 2022 depreciation will be this one. Okay, 2022. Okay, then moving on, statement of financial performance. So now let's take a look at 2022. So 2022, just now we know already, right? My depreciation is this one, 6120. So here, it will be shown under my expenses because like I mentioned, depreciation is an expense. Okay, we can write it down again. Depreciation is an expense. Acute D, contra asset. So it will be a good habit if you can just write down all these category in brackets whenever you do your journal. Okay, expense, contra asset. Okay, then for here, position, same thing. I will show this 3 column. Under NCA, my cost 680, acute D, MBV. Again, I will take from my table, right? My cost, my acute D, my MBV. So 2022, my cost is this, my acute D is this, my MBV is this. Okay, so simply just extract from the table and there you go. I have my answer. So I strongly recommend using tables for calculation, especially reducing balance. Okay, then for 2023, now we're doing 2023, not the same. So 2023, just now we also know, right? 2023 depreciation is this 5508. Okay, so under my expense. Okay, and for position, same thing. I will show these 3. So this one take from where again? Also from my table, nicely presented already. 2023 cost, acute D, and BV. I just plug from the table and I paste it here. Straightforward. Okay, good to go. So now we will take a look at this question where we have 2 assets involved. So the previous one is just for me to introduce how to depreciate, how to extract depreciation for different year, how to show and present in your financial statement. So now this will be like a more exam standard kind of question, okay, where you have 2 assets at the same time. So for here, let's highlight the keywords. First day, we have all these figures. Okay, so these figures are for my April 1st. Okay, and then they say that on this day, they buy a new printer for this amount on credit. Okay, and our depreciation policy will be 15% using reducing balance. Year depreciation charge in the year of purchase, our year end, March year end. Okay. Okay, so whenever you receive question, try to highlight the keywords. Okay, highlight the keywords. So for here, in total, I have 2 equipment. Okay, this is my first one, and then this is my second equipment. So total, I have 2, which means that later on, I'm gonna show 2 tables. Okay, so for here, same ideas. Full year depreciation charge in the year of purchase means that I don't need to go and prorate the months. I don't need to count. I will just take it as, although I buy in June, I'll just take it as the whole year. Okay. So here's the table. I will break it down for you all. So the first equipment will be this. Okay, so how did I come up with this date? March 2021. Okay, so a lot of students struggle with this. So these figures, remember, are from here. So you have to remember this. Okay, last year ending is equals to this year beginning. So whatever that I end with last year would also mean that I'm starting the same this year. I begin with the same this year, correct? So this year, April 1st, I started with this. Means last year I ended with this. So last year it will be when? It will just be one day before. Lor. So 31st, 20 March, 21st, what am I saying? 31st March 2021. Okay, so it will just be one day before this, our first day. Okay, then simply I will just copy paste these two figures into my table. So 15,300, it will be under my cost. Okay, then a QD of 4710. So I just copy from the table. Yeah, so your depreciation here, you can just leave it blank. It's okay. Just leave it blank. Okay, so then my MBV, same thing. How to get MBV? Cost minus a QD. So I take 15,300 minus this. That will give me my MBV. Okay, so I'm going to repeat this process all the way until 2023, because in this question, I want to see the depreciation, okay, depreciation and acute D for 2022 and 2023. So I'm going to repeat this process until 2023. Okay, so I will follow where the question want me to, what my question want me to show. So I repeat this process. So 2022 next year, cost still the same. 15% depreciation. So I will take 15%, multiply by my MBV, and I will get this. Okay, because it's a reducing balance. Then same idea, accumulate depreciation. I have already accumulated 4,007 so far. And then I will add on to what I have this year, I depreciate, and this will be my acute D. Okay, I accumulated this one so far, and I add on to what I have this year, and this will be my acute D. 4710 plus 1589, that will give me the 6299. Then same thing, MBV, cost minus acute D, I will get this one. So when I calculate MBV, I will take the current year cost minus the current year depreciation lah. Okay, so I will always go line by line. Okay, current cost minus current year depreciation. Okay, moving on. Next year, I'm just going to repeat this process the same. Okay, so again, depreciation multiplied by MBV gives me this. Then acute D, I will take this plus this, it will give me this. And then same thing, MBV, it will be cost minus acute D, and I'll get this. Current year cost minus current year acute D. Okay, so we are done for the first equipment. So which is this. Now we have to look at this second equipment. So second equipment we bought on 1st June. So my first year end, when will be my first year end? 31st March 2023, right? Because if you were to draw the timeline, my year end is March. I buy on June 2022. So March is already crossed this already, right? So the next one, it will be 2023. The next March I have will be 2023. So my first year end will be March 2023. So identifying the first year end, normally students, they have trouble doing it. Okay, but again, as you practice more, you will be able to get the hang of the question. So it's all about practice. Okay, so here, full year depreciation year of purchase, so I don't have to go and prorate the figures. So for here, my cost, I will just follow, since it's the first year, I don't have any acute D, I also don't have any MBV, right? So I will just take the rate, multiply by the cost. So that will give me this. And same thing, no acute D prior. My current year depreciation will also equal to my current year acute depreciation. Okay, and then MBV, same thing, I will take cost minus acute D, and I will get this 3,655. Okay, I'm going to erase all this marking because it's very, very messy. Yeah. Okay, so here we are interested in depreciation and acute D for these 2 years. So very simple, right? With this table, 2022 depreciation, this one. Okay. Then for 2023, in 2023, I already have two equipment, right? So 2023, I got two. So my depreciation, it will just be this plus this. Simple as that. Okay, so the same for acute D. So my acute D 2023 will be, okay, I think this one we highlight. I will just take from here, 2023. Okay, and then my 2022 depreciation will, acute D will just be this. Okay, so there you go. So if you sum up your these two together, this is what you will get. Okay, you sum these two up, this is what you will get. Same for the acute D. You sum these two up, this is what you will get. So very simple with the table, right? Just plug the numbers and you are good to go. Okay, so this portion will be for O levels only. Okay, so if you're not taking O level, this part you can skip it. Okay, it won't be tested for N level students. Okay, so the third portion I would say will be sale of NCA. So how do we account for a situation where we sell our NCA? So whenever we sell our NCA, there's always three steps. Yeah, I will always teach my students there's always three steps you need to remember. So here I already say that you are selling an NCA, right? So when I sell an NCA, what do I get in return? Money, right? So I sell NCA, I will confirm receive some form of cash. So my step one, I will have to debit all the cash at bank that I receive. Okay, or other receivable. So it depends on your question lah. Are they selling it and then they immediately receive cash, or are they selling it on credit? So it depends on the question. Okay, so first one, I sell means I'll receive money. So step one, debit cash at bank. Step two, I'm selling what? I'm selling NCA, what, right? So when I sell my NCA, I have to minus my NCA. Agree? So to minus NCA, here, I will need to credit my NCA. So here, my asset will decrease. Right? So I minus NCA, my NCA decreases. I sell it. So there's no more NCA, I will credit NCA. Okay, then my NCA, along with my NCA, what does it come with? It comes with my acute D. My acute D. So my acute D is a contra asset, remember? So to minus this, I will have to debit it. So this one will be my first step. So first, I record the money coming in. Second, I record the NCA that is selling. So I minus it. And I also need to minus the acute D of the NCA that I'm selling. So these three steps. After this three step is done, my fourth step, it will be this sale of NCA. So this one I put DR or CR. Depends. So for this situation, I debit it. Sorry, in this situation, we are crediting this. So you have to see the number. So if your debit side is more than your credit side, to balance the journal, I will need to credit another amount to balance it, right? Then it will be a gain. Why? Because credit, it is an income. So income, it will be a gain. I'm making money. Credit is an income, which is a gain. Okay, so this one, it will really depend on how you're going to balance the whole journal. Okay, so later we do some example, you will get what I mean. Okay, so this one will be the gain scenario. Okay, credit is income, so it's a gain. Okay, then another scenario will be this. So the steps is the same thing also, the same thing. So first step, I will record the money coming in. Second step, get rid of the NCA and get rid of the acute D. Then now the third step, same thing, to balance this, I realized that, hey, my credit is more than my debit. So to balance it, I need to DR it. So here, debit, it will be an expense. Okay, it's an expense, so means it's a loss. This is treated as an expense. We are losing money here. Here we make money, here we lose money when we sell the NCA. Okay, so basically these are the journal entry lah. Okay, so it's the same. So the sale NCA, you will just see how much to balance. Let's look at a scenario. So this one is gain. We are making money. Gain. Okay, so here, so our old equipment costing this amount with an acute D of this, and then they pay business this one, 20K. So for here, this is a very straightforward question. I just want you guys to get used to the journal. Okay, so in a real life question, they may not give you everything so nicely. You probably have to calculate the acute D on your own. Okay, so for here, this will be the journal. Okay, so first step, I have to debit the money that is coming in, right? So they pay me 20,000, so I will debit cash at bank or receivable 20,000. Okay, that's the money that come in whenever I sell a NCA. Then the second step, I will have to credit my NCA because I sold it already, but there's no more NCA. I sold it, so I need to credit it. Okay, I need to minus this. Okay, so this one will be my second step. Along with my NCA, it also comes with a acute D. I want to get rid of it as well. So it's a contra asset minus. I need to minus the acute D also. So here the acute D is given. Okay. Then now I will look at this journal. Okay, my debit side is more than my credit side. So in order to balance out this journal, I will have to credit another 6,007. So the fact that I credit would mean that it is an income. Okay, that means that this is a gain. Okay, so here let's look at the FS extract lah. Okay, so like I said, just now is a gain ma. So normally credit is an income, is a gain. So I will just put this as a other income in my statement of financial performance. Okay, so gain of how much? This one, 6,000. Okay, so please don't write this. This is not what we gain. This is just what we receive. What we actually are making, the profit is this 6,700. Okay, so just be like that under income because it's a gain. This should be quite straightforward. Okay. Then another scenario where we are making a loss this time. Still the same condition. Okay, our NCA costing this amount with an acute D of 21,700, and we receive 12,000 for our equipment that we sold. So same steps to apply. First step, money that come in, 12,000. Debit cash at bank or receivable. Second step, selling the equipment. So I need to get rid of the equipment. Credit the NCA, credit equipment, because this equipment is gone. Okay, and then third step, with the equipment, it also comes with what? Acute D. So I have to get rid of the acute D as well. So number 3, I need to get rid of the acute D. Okay, control asset. So minus DR. Then now finally, I will look at this equation. Sorry, not equation. Look at this journal again, right? So here, DR and CR. My CR is more than my DR. So in order to balance out this journal, I will have to debit another 1,300. Okay, I have to debit another 1,300. So the fact that I debit here, which means that it is an expense. It's a loss. We are making a loss here. DR is an expense. Okay, so here, same idea is an expense. Okay, it's a loss, so I will just show it here under other expense. This is a loss. So this number, it will be the balancing figure lah. Is this one lah. Please do not take this, okay? No, is this the balancing figure? Okay, so let's move on. This one, it will be a bit more challenging. So this one where we will have 3 NCA and we'll have 3 different things going on. So we are gonna have an existing equipment that we sell, and a new equipment that we buy. So total there will be 3 things involved here. Okay, so let's take a look. First April, we have these figures. Okay, so I know that these figures are meant for 1st April 2020. Okay, and then they say that on 23rd June, they sold one of the equipment for this amount, costing this amount. Okay, so my cost is 5,000, and we received a 2,500 check for selling this equipment. Okay, this equipment sold, we bought it on 30 April 2017. Okay, and then we go on to say that 1st March 2021, they buy new equipment for 8,000 on credit. Okay, and here 20% using reducing balance method, full year depreciation charge in the year of purchase and none of the year of sale, our year end 31st March. So essentially what this sentence means is that regardless which year that we buy, I will still count as 12 months. Okay, so although the first year I only use for 3 months, I will still count the full 12 months. Same thing for the year that I sell. Okay, let's say I sell on maybe like 3 months after my year end, I don't count depreciation. So on the year that I sell, I do not count depreciation. I do not count depreciation. I just take it as 0. No depreciation on the year that I sell. So that's what this sentence means. Okay. So when you see this sentence in exam, it's a good thing. You should be happy. Okay. So here, three NCA. So I know this is the first one. Okay, the one that I sell, second one. And here a new equipment. This is my third one. So total, I will have 3 equipment, which means I will need to show 3 tables. Okay, I need to show 3 tables. So for this kind of question where there's a existing and then a buy and then a sell, right? We will always do the one that we sell first. So we'll always do the one that we sell first, and then the existing one. Okay, and then the new one. Why? Because when we sell, we will need to calculate the acute D first. I need the acute D of the one that I sell, then I can calculate my existing. So you will get what I mean in a bit. Okay, so here calculate depreciation expense for the year 2021 and 2022, these 2 years. So this will be the table that I will do. So okay, let's break it down. So this one will be the one that we sold. This will be our existing. Sorry. Yes, the first one is the one we sold. Okay, then this one is the new one. Okay, and then this is the existing equipment. Okay, so total we have 3 things going on, so we need 3 tables. So let's start with the one that we sold first. Okay, the one that we sold first. So the one that we sold first, we know that it costs 5,000. So my cost 5,000 as well. 5,000. Okay, and then since this is the first year, again, I will apply the same concept again. First year, no acute D, no MBV, so I will just take rate multiply by the cost for the first year. So 1,000. Then again, I don't have any acute D from before one. So whatever acute D is 0. So my this year depreciation will also be my acute depreciation. Okay, and then same thing, MBV will be cost minus acute D. Okay, so cost minus acute depreciation. Okay, and then here, because we are doing it and doing reducing balance, so for my following years I will take my MBV, I will take rate multiplied by MBV. Okay, then the other concept will still remain the same. Okay, and I will just continue this until March 2020. Why? Because I sold this on June 2020. So remember, on the year that I sell, I don't need to count. So anything past the March 2020, I don't need to count anymore. Okay, because my year end is a March year end. So anything past 31st March 2020, I don't care already. Okay, it will just be it will just stop there. Okay, so here my sold equipment, I will just stop at March. So I know that when I sold my equipment, my total acute D, this is what I have. So this is the figure that I'm interested in. Okay, total I sold. And as at the time that I sell my acute D total, I have 2,440. So this is what we are interested in. That's why we always do the one we sell first. Okay, then the second one, I put the new equipment. So very straightforward, right? The new equipment buy on 1st March 2021 for 8,000. Okay, so the concept is the same. It's a brand new equipment, no acute D, no MBV. So first year I will still take cost. First year depreciation is also equals to first year acute D. Okay, then the following year I already have MBV, right? So I will just take rate multiply by MBV. Following year it will change already, the depreciation. Okay, so this one nothing new, same thing that we have been doing just now. Okay, then now for existing, that's where it's a little bit complicated. So the first one, which is the first equipment. This is the existing equipment. So we know that this existing equipment we have on 1st April 2020. So as at I have these figures, when I have these figures, it is on this date. It is on 1st April 2020, right? And I know that only in June 2020, then I sold my equipment. So do you agree that this equipment that I sell is inclusive inside these figures as at 1st April? Okay, I repeat again. These figures are taken on 1st April 2020, right? And when we sell our equipment, the day that we sell is June 2020. Okay, which is after this date already. It is after this date. So do you agree that the equipment that we sold, the figures are inclusive, are inside this one? Right? Okay, so what do I do? Okay, so now that I sell already, I shouldn't keep these figures inside, because in this figure, it consists of the figure of the equipment that we sold. Okay, this one includes the one that we sell. So what I do, I need to minus it out, right? So I know that total I have 30,000. The one I sold is 5,000. Okay, so I will need to minus it out. So my cost of my existing equipment is how much? 30,000 minus 5,000. Okay, so 30,000 minus 5,000, and that is how I get my 25,000 cost for my third one, which is the AKA my existing equipment lah. Okay, so again, as you practice more, as you do more often, you will get the hang of it. Okay, so I will also copy from the question here, because already given my acute D here. So again, I know that inside this figure, inclusive of my equipment that I sold also. So I know the total acute D I have 10,008. Okay, then just now remember I say I'm interested in this figure, this 2,440. So I know the one that I sell, the one that I sold, my acute D is 2,440. So I will take 10,008 minus 2440. Okay, and that will be what give me this. Okay, I'll write it here. Minus 2440. Okay, so I need to remove all the cost and the acute D of the asset that I sold. Okay, then with that, now that we have settled on this, everything else, it will still be the same already. Everything else will be the same. Okay, so cost minus acute D and BV again. Reducing balance. So next year, I will take 20% multiplied by MBV. So that's how I'll get my depreciation. Okay, and then acute D, same idea. Last year acute D, add on to this year, and I will get this. And repeat the process again. MBV is cost minus acute D. So every year, I will do the same thing until the year that I will stop until the year that my question asked me to stop at. So for here, we will stop at March 2022. Okay. So this kind of question will be higher order question. It's a little bit more complex and challenging. Okay, like what I've been repeating all along. Okay, so the more you do it, the more you practice, the more you keep repeating the same things that you do, you will get better and better. Okay, so here the only confusing part or the so-called challenging part will just be the minusing out part. Okay, where I minus from here. So you have to ensure that your figure, this one, is correct. Okay, and your years are also correct. Because if your years is wrong, then the numbers, it will jump already. Okay, so basically this is how you do, okay, for like 3 things happening at once. Right? Okay, so I want depreciation for 2021. So I will come to 2021 and the depreciation together. So I'll add these two together. 1,600 plus 3,328. Okay, and also the 2022. So 2022, I'll add these two numbers together. Straightforward. Okay, then this should be what you have. Okay, so this should be what you have. You can see, not too messy. Okay, so I will just add them up. So in the event of exam, please write this table. If you're drawing a table, please write this table in your answer paper. In your answer paper, because nobody will see this in your question paper. Your question paper, you will just take home. Nobody will see. So please write this in your question paper so they know how you derive this figure. So this is a form of your workings as well. Okay. And so please show this in your answer sheet as your form of working. So when they see this, they will be like, okay, so this is how you calculated. Okay, so quick one. Statement of financial performance position. So here I'm only interested in 2021. Okay, so what I've been repeating is the same. It still applies here, no matter how complex the question gets. The steps that I do is still the same. Okay, so here statement of financial performance, so definitely is expense. So depreciation, so same thing, 2021, my depreciation, I will take from these two, right? These two. My 1600 plus 3328, which is what I found out from here. Okay, so again, everything derived from your table. Okay, so this is how I get my number. Sale of NCA, so which is what we were doing. Okay, so for here, I didn't show the journal, so you know what? Let's just do it together. So for here, let me erase some things because they're very messy. Okay, I cannot erase, never mind. Okay, so for here, I received a check of 2,005. So cash at bank, debit cash at bank. 2,005. Okay, then what else I need to do? Remove the equipment, right? Because I sold. So credit the equipment, which costs 5,000. What else I need to get rid of? The acute D that comes along with it, am I right? So which is this 2440 that we found out earlier. 2440. So I will debit my acute D of 2440. So from here, how do I balance this? Which side is more? So 2440 plus 2500, that is a 4940. So to balance this, I have to debit another 60. So this will be my sale of non-current asset, 60. So this is at the DR side. Therefore, I will call this a loss. Okay, DR side is an expense. It's a loss. Okay. So repeat again. First, I debit the money that come in. Okay, which is here. Second step, I remove the NCA. I credit NCA because no more NCA, right? Okay, so I know that it costs $5,000, so I credit it. Third step, I need to remove the acute D that comes along with it. So acute D is how much when we sell? From the table, I know that the acute D when I sell, I have this 2440, right? Okay, then I will debit it because I want to minus the acute D. So overall, I know that I need to balance my DRC. So my credit side is more than my DR side. So I will have to debit another 60 to balance this journal. So the fact that I debit it would mean that it is a loss. Okay, because debit is an expense. So it would mean has a loss. We are losing money here. Okay, so for here, I know it's a loss. So it will be under expenses. Okay, here we are making a loss. It's a loss. Okay, and then statement of financial position, same thing. I need these 3 columns. Okay, and then I will still take from my table. So I will just sum them up together. I understand that here, yeah, we have 3 asset, 2 asset together. But when I'm showing my FS, I will just show it as one line. I don't need to show 1, 2, 3. I will just show as one line. Okay, and then I will add them up. Okay, so for cost 33,000, how I get that? I will add this one. I add them together. Okay, so this one will be 8,000 plus 30 plus 25,000. Okay, then same thing here, my acute D, I will just add them up together. Okay, so 1.6 plus 1,168. Yeah. 2021. Okay, then my MBV will be the same thing, cost minus acute D, I will get this. So another way you want, you can also just add from here lah. If you want, you can just add from here also. Oops. You can add from here as well. You can add this and this together. So the figure will be the same. You will all tie up together. Okay, so that will be all for this chapter.